Even JP Morgan is now warning that central banks have created an impending crisis. It remains to be seen what will trigger an event that will bring the markets down. But there is certainly no shortage of potential causes, that's for sure. Quantitative easing policies globally have caused massive dislocations, and eventually this will end in an uncoordinated mess of tears and disbelief. You came here for the truth, so let me unveil that for you. Today we are going to look at what JP Morgan is saying. Can you believe it? The Money GPS and JP Morgan on the same page. It is true. So I'm going to connect that in with a bunch of different issues today. So let's begin by taking a look at this article out of Bloomberg. ECB bond buying creates zombie companies, possible successor to Diamond warns. The ECB's bond buying program has created a, quote, dangerous environment for investors by masking risks in the market for corporate debt. All right? So this is the quote that she actually said here, and it sounds like it's coming out of the pages of the Money GPS, like word for word what I've been talking about. You're equally rewarding the A+ student and the student who's doing no homework and is just showing up. That's a super dangerous place to be, because when that gets pulled back and the markets have to sort of figure out the good from the bad, and you have real money buyers in there as opposed to governments, then you start to do your homework and you figure out this is not all the same. In essence, the policy means that the market isn't properly pricing risk, making it harder to invest. That's exactly what I've been talking about here. As you have central banks in there, now they start to pull back on that. First of all, if you still have buyers to buy up what the central banks aren't, then you have to understand, will they be pricing that in the same as before? Of course not, because you have a major buyer holding trillions of dollars of something, and now suddenly they pull back on that, it's gone. Who's going to be there to buy it? And when they are they going to buy necessarily that, or are they going to buy another asset which they feel is safe? The money is going to make its way around. The only money that is supposedly going to have to disappear is the central bank printed money. Where it's going, I'm not exactly sure, but we know that this is a very, very ridiculous method of money born out of debt, currency basically born out of debt. That is a mind-boggling thought process you have to go to in order to really rewire your brain and how they have created this disaster. Okay, if I go into a connected article, we can see what she also said here. Every moment since the financial crisis of 2008, our job as financial advisors is to help clients re-risk when it was uncomfortable to do so. Well, they've done it, and now they're very uncomfortable doing it, and they see no risks on the horizon. So now they're even more comfortable, and no one is reassessing their portfolio and saying, hang on, that growth portfolio that I had a small allocation to is now a very big allocation because it's up 17% year to date. She is bang on with this. I completely agree with the analysis. Of course, not exactly what the company does, but hey, I'm going to give credit where credit is due, and she is right on the money with this and the previous quote. I mean, it is amazing and refreshing to hear this information coming out of something like JP Morgan as well as CNBC. We're getting the truth finally. But the fact is that the average person is not going to change their portfolio because they look around and they're thinking, well, that stock has not done well this year, and that stock has not done well, and that mutual fund hasn't really done well at all, and these bonds haven't really been doing well, and so why wouldn't I just leave my money here? And that's what we have, this whole concentration that I keep talking about. Big mistakes that people are making today, and it always happens at the top of any cycle, so we'll see how savvy people can become over the next months and potentially longer. Who knows how long they'll keep this whole fraudulent game on for. I thought that this statistic was one that I needed to keep you up to date with, and that is existing home sales year over year. You can see it's in the red now for practically all of 2018. And this right here shows us we have to be concerned because homes are not what they used to be. They used to be some way that you could make 100% on your money in a few short years. That should be a thing of the past. There are some markets that are still going crazy. However, we can see that there are areas that is just slowing down. The inventories are building up, and Manhattan, believe it or not, Manhattan is one of those places. And if you're from Australia, I'm going to do my next video on here about Australia. I've dug up some really good information, so stay tuned for that, all my friends in Australia. Okay, so we have the issue that some parts like San Francisco, the price is just going crazy. And then you have Manhattan, which you're talking about $4,000 to rent a place there. $4,000. Meanwhile, the prices of the homes have started to decline. You see that they have been, whether it is above 1 million, like luxury market, or even sub 1 million, the prices there are selling below asking price, or when they sell for the asking price, it's actually because they were previously reduced. So it was something I showed you here on the channel before. 80% or so have actually been priced at that asking or below. But as I said, the asking is actually coming down because of what they had to do in order to sell it. Okay, now we look at the FANG stocks here. I'm going to show you two charts. This right here just shows you Facebook and Google as two examples, the top and the very bottom ones here. The earnings were apparently so good, and all of a sudden the stock goes considerably much higher. But one thing was that Amazon, I don't know when this chart was produced exactly. I think it's just after 12 o'clock. So this is just showing us a short time frame, right? I just wanted to show you the fact that earnings reports come out and then suddenly the FANG stocks just rise. This here is not showing us with Amazon because of everything that's going on with the tensions between Amazon. Are they going to be taxed? Are they going to be facing increased regulations? What's happening with them? So that obviously spooked that stock in particular. But don't worry, because they'll just buy the dip and suddenly everything will be okay yet again. There's the FANG stocks. You can see that there was some buying the dip right there. No different than what we see every single day. Anytime there is a small dip, there will be algorithms and individuals also ready to pick up the pieces. All right. Now, on this channel, I covered quantitative cheesing, and I'm not being silly. That is, in fact, something that's a real thing. The billions of pounds of cheese that is hanging around the US. But now we have, is this quantitative meating? I'm not sure if that's appropriate, but 2.5 billion pounds of meat piles up in the US as production grows. All right, so we're going through a lot, obviously, okay? So there's a massive amount. There's no denying that. However, we have stockpiles forming of different commodities, whether it is cheese, whether it is meat, and that tells me something. What's going on? Are we not exporting that as we were before? Okay, so they basically discuss the reasons why this could be happening, and this is an article basically connected in with that one. Record production of beef, pork, poultry, and turkey has become increasingly dependent on exports as U.S. consumers cannot buy up the huge amount of meat. That would drive down prices for American consumers, restaurants, and retailers. However, tariffs having an issue, and so on. Okay, so we'll get into that. And I just wanted to talk about there's different reasons why this is occurring. I'm sure a lot of this is the patterns that people change their dietary patterns over the last few years. That's probably a factor as well. But we have subsidized industries, and that's something I really don't like. Why is the government stepping in and saying, you know what, I think we should subsidize, let's just say, the dairy farmers? Well, who decided that? Are we just going to say that that's the industry that's going to be subsidized? How about no subsidies? How about we let the market decide? No, we can't have that. Bad things are going to happen if we do that. So let's just let a few select people who are completely controlled by lobbyists and other institutions, they can decide exactly where the money goes and how this all gets controlled. Yeah, it makes sense to me. Okay, and there's a chart version there just to show you that. I just wanted to be very thorough so you can see the quantitative meeting. All right, I'll end the video there. If you are new to this channel, you're probably wondering, what the hell did I just see? Well, hope you join me for the next one, because there's lots more where that came from. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that. Thank you. And if you want the financial education that you were not taught in schools, well, these two books have it all. If you read these two books, you're going to be able to get everything from A to Z, from top to bottom. You'll have it understood. You're going to be able to figure out the history, the foundation, everything from the beginning all the way up until present day, but it does so in such an easy package. No other books are like this, okay? I wrote very, very simply. If you know the financial system, or if you don't, I assure you it's going to be very, very informative. That is a fact. You can flip through the books at Amazon. There's a link in the description of this video, and if you're more interested in the audiobook version, you can get that at themoneygps.com.